Hi, everybody, and welcome to another Platinum Mastermind call for 24th of April 2019. Now, I've been doing these calls now for the last a couple of years, and this is a part of my joint venture mastermind and part of the mentoring experience that all the students get who enroll onto either any of my high-ticket bootcamp programs, my online programs, or directly onto the JV Mastermind. And this is an important component of what we do here because I can show you the ropes and I can show you how to do things, but the best way to learn is from someone who's already done it. And the best way to do that is through a mastermind where we can work as a collective and bring together all the experts that we have in our group. We have just over 100 members now, which is really, really cool. So first of all, let's just go through the format again of how the mastermind works. Okay, so the mastermind call process, how it works is I put a post up in the group, and in that post I get everyone to state their current challenge or current roadblock, and then I get them to list in that post what challenges they're currently having, so we can discuss it on these mentoring calls, which we do every 2 weeks. Then as a group, we all ask any qualifying questions to find out whether this is an actual challenge or not, and then we propose a solution. Now, as a collective, as a mastermind, we come up with a solution for that individual, and I myself come up with a separate solution also, being the person in the group that has the most amount of experience in this field. So first of all, we have 2 challenges this week, which is really, really good. The first challenge is from Connor Kim, and Connor says, I have a relationship with 2 companies that I would like to put together joint ventures for as the JV broker. So this is really, really good. This is primarily what we do, and this is primarily one of the main facets of what I teach when it comes to joint ventures, apart from the joint venture consulting and the deal making also. And Connor says he has company number 1, who are a skincare line company in Singapore, and he personally knows the owner as a long-time friend, which is really good. You know, we're all about relationships, and we're all about reaching out firstly to our own networks to see how we can work with people we know, like, and trust, right? And then company number 2 that Connor has on his list is a popular jewelry brand in New York run by a Korean CEO. Now, what I'm going to do before we go into talking more about solutions for Connor, does anyone have any thoughts and ideas on what do they think, or any qualifying questions? What do they think would be a good idea of a joint venture between these 2 companies? So company number 1 is a skincare line company. Company 2 is a popular a jewelry brand. So does anyone have any questions for Connor to put forward in terms of to decipher more in terms of how they can help Connor put together a JV between these 2 companies? And obviously I'll present, you know, my solution also. But anyone have any ideas and thoughts, questions, or is anyone in the group that has had experience of dealing with luxury brands or high ticket brands? There's quite a few of you on the call today. So any thoughts or any ideas on how you think you can help Connor, or give him some suggestions? And for those of you watching the recordings, thank you for taking the time out to watch the recordings. Make sure you go back into the group. If you want to watch past mastermind calls, just type in mastermind call recordings into the search box in the group, and you'll be able to get access to all the past recordings as well. So Faizan has chimed in and says, I'm thinking that both these companies probably have similar clientele, so cross-promoting their products. And this is exactly what it is. And Faizan has hit the nail on the head. It is all about cross-promotion, right? And the one great thing about this is, you know, there is already an existing relationship that Connor already has with the skincare line company. Which is really, really good. There's a lot of factors, to be honest with you, that you have to look into, and before I go into delving more into the exact solution, does anyone else have any ideas, any more ideas before I go ahead and talk more about what I think the kind of JV that Connor should do for this. I mean, these are two interesting companies, okay? Because number one, they're high ticket, okay, value wise. So there's money in exchange, and obviously margins as well. I believe these two companies probably have great margins. So I always say to you, look at two areas. One where money is exchanging hands. So money is being made on a regular basis, okay? Companies are making money. And number two is the margin, because you are guaranteed to make money from companies who are already making money, right? That's the whole point. You find companies that are making money already. Either the best way really is through new sales, okay? So they're spending money on lead generation, creating new sales. Our job really is to say to them, look, we can, number one, come in and help you decrease the cost of marketing advertising by doing more joint ventures, or carry on with the new sales. We don't want to disrupt that part of your business, but we can show you how to get more money from existing customers and create a new revenue stream for you, right? which is exactly what I'm going to suggest to Connor. So let me go on and move on to my solution, which is a classic one. So here, this is my solution, okay? For Connor. Connor's on the call as well today. So first of all, Connor, you need to find out the number of current paying customers of the skincare line company, okay? Very, very important. How many paying customers do they have? We don't want to talk about how many people on their list, how big is their database, how many paying customers do they currently have on their database, right? Very important. Number two, we want to find out the average sale of each customer. What is the amount of money that each customer is spending, or the lifetime value of that customer, right? Because that we don't want to go out and find incompatible joint venture partners, right? We want to find joint venture partners that can provide something to their customers that, number one, they can afford. Number one, two, is great value for them. Okay, so those are two aspects. Okay, and I'm gonna walk you through a few things. Also, find out how many times a year they buy, right? And what you really should be doing, Connor, is you've got these two companies. Okay, my suggestion is go to your friend who owns the skincare line company. Say, I would like to broker some joint JVs for you, starting with the first one. And this is what we do, okay? It's normally a retainer up front. We normally charge a retainer, then a percentage of sales. But let me do one deal for you to prove the concept works, right? This is known as the coined Frank Kern results. What's it called again? Results in advance, right? RIA, right? This is a phrase coined by Frank Kern, which is what he does a lot for the consulting. Results in advance, okay? So you're giving them results in advance to prove that the concept works and that they would work for you long term. So the pitch basically is, I normally charge a retainer and a percentage of sales, but I'm going to do one deal for you. So sign me up. Let's draw an agreement. I want to be your JV broker. I'll bring you one deal, right? And that deal, I will waive my retainer on that deal, and I'll only do commission on a commission basis. And what we'll do is we'll split the profit, right? 50-50. Whatever you make from that, we'll split 50-50. How does that sound? That way, there's no risks to you, and I get my chance to prove the concept. And if I prove that the concept works and you make money, then you will have money available to pay my retainer for the next deals, right? So this is how we do it. You've got to be really clever, guys. A lot of you guys in the group are over analyzing and overthinking because you're putting the money before the experience of doing it. You're saying, you know what, I'm not going to do it if I don't make money. But that's bullshit, because at the end of the day, you have to. You're never gonna get it out there. You're not gonna get out there and do it if you keep thinking, if this guy is a big company, blah blah blah, great company, but I would seriously work with them, but they don't want to pay me up front. So what? The whole point is you get the experience, you will make money, because if that company's making money already, you're guaranteed if you do a JV, you will make money. Just a slow process, and you get paid at the end, not at the beginning. But this is the best way to do it. I mean, you could do this millions of times. I mean, I've done this so many times when I started to get my foot in the door. And the thing is, you'll build up a reputation, you'll build up credibility, you'll build up testimonials. Then you can charge what the heck you want. Me, today, if I walk into a company, they'll pay me 30 grand a day or 50 grand for 2 days with a blink of an eye. Why do you think they do that? Because I've been doing this for 15 years. I have collateral. I have a lot of collateral out there that shows people what I can do. And I have the ability to do that because I went through that process. Okay, so you have to do the same thing. Now, Connor, what I would do is get this guy signed up as a customer, use one of the agreements that you have in your agreements folder, and do the audit, sales and marketing audit. You run the audit, and that's how you'll get all this information, all this data. You need that data to be able to analyze and target which specific joint venture partners are going to help this company. But look, everyone, all of you guys, listen to me, right? The first deal that you do it on a commission-only basis, but it's one deal. So when you sign an agreement with the company, it's for one deal, okay? One deal. Not I'll do as many joint ventures as you can, I'll work for you as JV broker, I'll bring in lots of JV partners. No, it's one deal. One deal shot, retainer waived, commission only on this one. But the next time we do it, we go back into business together, it'll be a new agreement, and then it will lay down, this is my retainer, this is how long I'm going to work with you, and this is what I'm going to get from it, right? So just bear that in mind. You have to do these things if you want to get yourself out there. Jay taught me a lot of things, and one of the things that he used to do, which I showed you guys everywhere, and I'm not going to reveal too much because I've got a couple of guys on this call who are going to be at my boot camp next week, but it's the JV consulting method, right? Of using the book and getting into a 5 million, 25, 50, $100 million company and consulting with them, right? And them actually letting you in because it's a risk-free approach, right? A risk-free proposal. But like I said, I'm not going to go too much into that. Most of you guys who have gone through that and seen the $10,000 letter that I paid 10 grand for and the process, you know how it works, right? But I don't want to spoil it for other guys who are going to be at my boot camp in Vegas next week, because it'll blow their mind. Okay, so right, where are we now? Step 3. Okay, find out how many times a year they buy. Okay, offer this. Here's what we do, right? Next, offer the skincare line company a way to increase their sales without affecting their new sales by adding a new revenue stream for existing customers. You'll only know from your sales and marketing audit if these guys have a sales system locked in, right? Because what you don't want sometimes is a comparison. They'll say, oh, we're spending this on lead generation and we're making this many sales. So if we spend this much money on you, this is how many sales we would expect. Bullshit. Doesn't work like that, right? So you want to be able to say, okay, you guys carry on what you're doing, and we can work on that phase 2. Phase 1, let me show you how to make more money from your existing customers. I'll build a new revenue stream for you, right? Okay, let's do one deal. I'll show you how the concept works, and then after that, we'll sign a new deal, and then I will create your new revenue stream for you, and get by getting existing customers to spend more by using JVs, right? Which basically is you're proposing to sell unique jewelry for the skincare line company to existing customers at a discount, and then you're splitting the profit with the owner. So this is basically the structure of the JV, right? This is basically how this one would work. Now, Connor's on the call. Connor, could you give me a yes or no in the chat box if you understood that, and if you like that, and does it make sense to you? Thank you. And anyone else that wants to chime in, tell me what you think of this, and tell me if you think you can improve that. Okay, tell me what do you think you could do better to that. I'd love to hear your thoughts. Okay, let's have a look. Okay, Eric says, I like it. I've got something for you. By the way, Eric's going to be at the, everyone who's at the bootcamp next week, Eric is going to be at the bootcamp also next week. Great guy. Look at his posts, right, in the group. Eric Bakay, ERIC BAKEY. Type that into the search box in the group. look at this guy's posts and look at some of the stuff that he's doing. He is an action taker, right? He's going to be at the boot camp next week, and actually so is Faizan, who's going to be doing some training later on in this mastermind call on the best way to set up your legal structure and how to save tax as a small business consultant. Okay, so but Eric, definitely, yeah. For those of you guys who are going to be at the bootcamp next week, Eric's going to be there as well. So it's going to be pretty exciting. Okay, so Eric's just putting something in there. Anybody else? I mean, Connor. Okay, brilliant. Yeah, Connor said yes. So Connor, is that something that you think you could do? And if you need help, reach out to me. Let me know. But I would pitch the proposal to your friend and get him to sign an agreement with you as his JV broker, and then do one deal first, you know, and I can help you with that, so it's not a problem. I'll even help you on the scripting on that as well, in terms of how we do that on LinkedIn, because it's pretty much the JV introducer strategy. So Eric Bouquet says, find out the cost of goods sold for skincare, percentage per month, CPL, CPA, and help them identify lifetime value. Then you could shop these numbers around for the dream come true experience for the 45-year-old free my avatar. I did this selling little black dress challenges. Okay, look. So Connor, you need to connect with Eric in the group. So go into the group, find Eric Bouquet, and message him, because Eric's done something similar to this, so he can help you. This is the thing about this group, right? There's a lot of us in this group that have done that have done this or done something. He did it. He's done it for a fitness offer. Eric, ERIC. Just type in ERIC into the group search box. You'll find him. So Eric did this for a fitness offer, then sold the leads to cosmetics, dentistry, retail, and supplements. Right. So this is something that you could probably he could probably help you with. Right. Piggyback on the back of. Brilliant. Thanks, Eric. Thanks for that. Okay, cool. So, good stuff. Right. Okay, so that's one. That's one down. Let's have a look at the next one. Okay, this next challenge comes from Jason. From Jason Gann. And if anyone has any questions, we are going to do a Q&A. After Faizan's done his presentation, he'll have his own Q&A for you guys. So any questions, and then I'll bring it back to me, and then we'll do a final Q&A to close. Okay. So if you've got any questions, just keep them coming in, and then I'll do that at the end when we wrap up. So Jason again has asked a question. So Jason says, look, the biggest challenge I'm facing right now is to find an education training company that I can join to help them do joint ventures for them. Right. As I have done a lot of personal business development training and truly believe education is the best products I want to sell, I'm looking for an established education training company to join as a joint venture partner. Now, here's my thoughts on this, right? Because I've done a lot of this. You know, I used to run an 8-figure online education company, corporate training company. So we were all about doing partnerships and joint ventures. I think for this challenge, and you guys have a look at this, I think Jason's asking the wrong questions, right? So Jason's saying, look, you know, I want to find one that I can join to help them. Now here's the thing, right? Number one, I don't think I can see Jason's on this call. No. Okay, so Jason, you're watching the recording. Number one, if you have had experience of using an education training company, then yes, that is your best bet to approach them and ask them if you can help them create more members or create more customers, literally for free upfront, okay? Because there's no upfront payment on a commission only basis. And like I said again, do one deal, see how that goes, and then continue. Or you have to identify first of all, right? So I'm going to go through the solution then. So you need to identify first of all the area of education you want to do a joint venture in first. Personal development? Is it, you know, what kind of training? What kind of education is it? Is it education companies for retail professionals, for real estate professionals? Is it for chiropractors. What sort of area of education is it? Online courses, offline courses, workshops, seminars. So I think you need to identify, first of all, the area of education that you're interested in. Could be personal development, for example. Yeah, that's the most important thing first. You need to identify that. Number two, you need to start targeting these companies on LinkedIn using this script, okay? You say to them, I would like to connect with you here on LinkedIn as I absolutely love what you are doing in the education space, right? Then wait for them to get back to you. And when they make you a connection, you say, thanks for connecting with me. I wanted to send you a complimentary copy of my best-selling book on joint venture partnerships, as I believe it will greatly help grow your business. Where would you like me to send it to? So that's how you start by getting into these companies. With the white label book, and for you guys on the bootcamp next week, I'm going to explain more about how that works. But for you guys in the mastermind group, you have access to the white label book and the white label scripts, which you can put your name on, my name on. It is basically a game changer. It is what gets you into these businesses, because you're giving something to them first without asking for something, okay? So that is basically the process you need to use to get into these companies, all right? Good? Okay, so I hope that helped both of you guys on the call. Right, Eric's come back. Eric, what's Eric saying here? Austin got to... Okay, cool. Okay, I'll cover that, Eric, at the end on the Q&A. So that's good. That's good. Did you? But just before I do that, Eric, did you connect with William? Is it William? Is it William? Was it William Tan? I can't remember now. One of the guys I know, he's based in Australia. He's doing this with Aston Martin, I think, and now McLaren with their showrooms, doing a lot of stuff in the luxury space. I'll connect you guys together. Yeah, okay, I'll connect you guys. I mean, he's I don't think he's in our group, but I think he's coming on to the next boot camp that I'm going to do. He couldn't make it for this one. I really wanted him to be here, but he's interested in the next one. So I'll connect you with it. I'll connect you with him definitely. Okay, guys. So I hope you guys. I hope that helped for Jason and for Connor. And like I said, guys, these calls are very important. So please do participate. Do come onto them every 2 weeks. Do put your challenges in the group, because it really helps. It helps other people as well, right? It's not just about us, and it's not just helping you. It helps other people who are on this call, right? And people who are watching the recordings. Okay, so just think about it, right? What you say, what you do, is not only for yourself. It's for other people in the group as well, right? So always think about that. That's why it's important that we do participate in these calls regularly. Okay, very, very important. Okay, cool. Right. So let's go. Let's move on. Now we're gonna have some. Like I say, everyone in the group has the opportunity to do some training for everyone in the group. So we have so many experts in the group. In the past we've had training on bartering. We've had different types of training. If you want to do a training session for the rest of the group on a topic that you're an expert in, Murray did one on LinkedIn. So just shoot me a message, let me know, and I'll get you up on the next call. And then you can do a presentation to the group. You're welcome to plug whatever you want. And like I say, it goes into the group, and a lot of people watch the recordings. So we're going to do some expert training now with lawyer and CPA Faizan Ahmed. Great guy. I met him at a Watch Conspiracy conference. Something that I'm also interested in brokering high level, high luxury assets. Something that I'm really interested in, and I've got another friend of mine coming to the bootcamp next week who actually brokers luxury yachts. So it's going to be really interesting having us all in the room. It's going to be a great bootcamp next week. So let me bring in Faizan, and then I'll turn over the controls to Faizan, so we can get Faizan to do his presentation. Okay, right, Faizan.
Yes, I'm here.
Hi. Okay, I'm going to just pass over the controls to you. Give me 1 second. Here we go. Okay. Right. Okay. Right. Okay. Cool. You should see a prompt on your screen?
Yep.
And I'll let you know
Okay,
as soon
so
as I can see your screen.
is my screen showing?
1 second, just waiting for it to come. Yes, there you are. Okay, got it. So I'll let you just get on with that, and then I'm going to mute myself, and then when you get to the end with your Q&A, we'll do that, and then I'll jump back on then. Okay.
Okay, sounds good.
Thank you.
All right, thank you, Sohail, for that introduction. Very generous of you. Hey, everyone else. I was talking to Sohail, and I asked him maybe that if I could do this training for you guys. So thought that it might be helpful for you. And Sohail was very generous in giving me the opportunity to do so. So basically, my company is called Famous Financials. Wanted to put together this training as tax tips for joint venture consultants. Now, since I'll be doing this training, I wanted to let you guys have an idea of who am I, just to you can have a brief introduction. So I'm CEO of Famous Financials, it's part of our parent company. We also do management consulting and alternative investments. And at the same time, I'm also the executive director of the Will County area in Illinois of the Cicero Law Firm, which has been established for over 15 years ago in Chicago, actually owned by my law school professor who offered me to partner up once I graduated, actually. So that was a really good opportunity for us. Now, just an example of services that we provide. On your left, you can see legal services such as immigration, wills, real estate, corporations, contracts, etc. And on the right is just services that we provide for Famous Financials, including tax planning, accounting, audit services, and even virtual CFO services. So just wanted to give you guys a little bit of background on myself, what I do, and just so you have an understanding of where I'm coming from. Going forward, so for today, there were two major things that I wanted to focus on. When you come into taxes, there are a lot of different avenues, but the two most important things is entity structure and the types of deductions. So entity structure, basically the legal structure that you need to have in place to just pay the least amount of taxes as possible. And types of deductions are the types of expenses that you are eligible to claim that a lot of people actually might not know about, that you can. So going forward, I wanted to put this in here that each year the IRS reports that it has roughly $1 billion in unclaimed refunds. And I think I just read an article maybe a couple of days back that over the past 4 or 5 years, it's gone up to like $14 billion. So the major causes of that is not filing tax returns, because people think that either they're afraid or they think that they don't have to, or mistakes caused due to self-preparation, or mistakes caused by an unprofessional preparer. Right? Now, the types of entities. So there are 4 major types of entities that you will look at when you're structuring your business. So you have sole proprietorship, you have LLC, the limited liability company, or you have the S Corp, and you have the C Corp. So of course, this is mostly based for US, so I don't believe that S Corps are anywhere else other than the US. So sole proprietorship, let's start with that. Also known as self-employed, for people who might have been doing business as sole proprietors. They might understand the form called a Schedule C, where you actually put your information in on your personal tax return. So A sole proprietorship is basically you just doing a business under your own name. The benefit of that is, of course, they're very, very low upfront cost, pretty much zero, because you don't have to pay anyone to do any incorporations. There's no fees for the state, for the city. You don't have to register anywhere. So you have absolutely no costs when you're starting out. And so on your taxes, you also, it just shows up on your personal tax return. You just show your income and your expenses and whatever loss or profit you are showing. Now, it's good if you're showing losses or you have a very small profit in the business, because once you start increasing in profit, I would say about once you start going over $10,000, $20,000 in net profit, then you need to consider maybe establishing a proper corporation. The major thing to consider when doing business as a sole proprietor is self-employment tax. So self-employment tax is just like Social Security and Medicare. And people familiar with, you know, on your job, when you get a W-2, that's the taxes that they take out. They take out Social Security taxes and Medicare taxes, and that's a fixed percentage. Everyone who has a job in the United States has to pay those taxes. But when you're self-employed, the IRS cannot tax you since they don't know how much you'll be making for the year. There's no reporting of it until you actually do your taxes at the end of the year. So they tax you at the end of the year. Now, one of the major things that you need to consider is that what happens with Social Security and Medicare is half of it is paid by the employer and half of it is paid by the employee. But when you're a sole proprietor, you are both. You are the employer and you are the employee. So basically, you are responsible for both. And so essentially, you're paying double on that, right? So that's why once, as you start making more profit, you need to kind of look at changing your structure. If you're making losses, it's good. Actually, the benefit of having being in the sole proprietor, especially in your startup phases, is that if you're showing losses, your overall income actually comes down. So if you made $100,000 on a job and then you had this side business and you made a $10,000 loss, you will actually be taxed on 90,000, not on the full 100, and then whatever the 10 loss is. So one of the benefits of being a sole proprietor is that too. So moving on to LLCs. So of course, major benefit is limited liability. Now, one thing to consider with LLCs is that if you are just a single member LLC, which means that you are the only owner, there's just one owner, it is also considered sole proprietorship. It is also considered as self-employed. So they are taxed the same. So it still shows up on your personal tax return. You still have to treat it the same way. Of course, the difference is that you have limited liability. So you have limited exposure to any liabilities that might occur in the future. Significantly more upfront costs due to incorporation expenses. So if you pay someone to do it for you, then of course you're paying their fees, plus you also have to pay the state for their incorporation fees. So these can vary anywhere from $200, $300, $500 to maybe $1,000, just depending on who you're paying, what state you're in, and those kinds of things. And so then you go on to a multi-member LLC. So that's the second type of LLC. So that's if you are more than one owner. So when you have that, you actually have to file a separate tax return for the multi-member LLC, which is called a 1065 tax return. And so that is filed separately, and then whatever profits or losses are shown on there are distributed according to the percentage of ownership, and then shows up on the personal tax return of the owners. The difference also on here, the same thing applies if you're making a profit. you are subject to self-employment tax. So that is still there. LLC and sole proprietorship is that you have limited liability. There is more upfront cost. Tax treatment is still the same. Okay. Now going on to the S corp. So this is one of the most popular tax status of corporations in the U.S., especially for small business owners. If you look at like big companies or even public companies, they're all typically C corps, which we'll get into later on. But typically for small businesses whose owners are less than 100 owners, there are some qualifications. You need to be less than 100 owners. Owners cannot be from outside the country and those kinds of things. So, but 99% of the people do qualify to be an S corp. Now, so you actually have to file an election to get the status from the IRS. It's pretty simple. Not a lot of people get denied for that. So the benefit of this is that you are treated as a separate corporation, and you also have limited liability, but the income or loss is also shown on your personal tax return. Right. So before, like on a sole proprietorship or on an LLC, any profits you show, you also have to pay self-employment tax on them. But any profits you show on an S corp, they are also carried over to your personal tax return. But the major difference is you do not pay any self-employment tax on that profit. So that's, you know, a pretty big saving when you calculate self-employment tax as an employer, and as an employer, you're looking about nearly about 15% in taxes. So of course that's a big tax saving when you prefer to be an S corp. Now also, if your personal tax bracket is lower, than your S corp profits will be taxed at a lower rate. This is comparing it to if you were a C corp. So if you were a C corp, the company profits are taxed by themselves at the company level, which with the new taxes is about 21%. So if your personal tax bracket is lower than that percentage, then of course a C corp is better for you. Now, one of the drawbacks of the S corp is that they require you to have an employee, so you have to run payroll, unlike under an LLC. So if you're a sole proprietor or an LLC, you do not need to show any employees on the company, but in an S corp you do. The reasoning for the IRS behind that is that you need to pay. If you are not running the company, then you will have to pay someone to run the company. So, and if you have to pay, when you pay someone to run the company, you have to run payroll, and when you run payroll, you have to pay Medicare and Social Security taxes. So if you are running the company yourself, you should also run payroll for yourself and pay those Medicare and Social Security taxes. So you see that the IRS basically, they have a big concern about people paying the proper Social Security and Medicare taxes, because they do have, and they're trying to crack down on that for especially S corps who don't run employees, and they do make profits, but the owners don't run payroll. And one of the requirements of showing. So it's not that if you're making $100,000, $200,000 a year in profit and you're only showing $10,000 in reasonable compensation. So, and that's something that you need to get together with an accountant to make sure that you follow those rules. So, so that's one of, you can say, one of the drawbacks of having an S corp is you have to run payroll. One thing though here is that even if you have an S corp but you are showing losses or very, very minimal profits, they do waive your requirement of running payroll, especially if you're losses. And if you do make a profit, as long as you are not taking money out of the company and the company is retaining it, the IRS can consider you to not run payroll since you're not taking money out of the company. So that's just one of the ways to avoid that. So moving on to C Corp. So when you form a corporation, this is the default status. Whenever you get your tax ID number from the IRS, this is the default status of every corporation. And so we're not talking about sole proprietors or LLCs. We're talking about when you just do an incorporation with the state and get your tax ID numbers. The C Corp is your default status, and that's why you have to elect to become an S Corp if you want to. So the major point of having a C Corp is that profits are taxed at the corporate level, and losses are also retained by the corporation. They do not carry over to the owner's personal tax return. So, and you can say one of the drawbacks on here is that compared to the S Corp is that when you make a loss on the S Corp, that loss carries over to your personal tax return and helps you on your personal tax return by lowering your overall income. That will not be possible if you have a C Corp. So if you're in the initial stages and you're probably having losses, S Corp is probably better for you. Also on here, to take any profits from the company, a dividend will need to be issued, and this is taxed separately on the owner's personal tax return. So that's another drawback. So if you need to take any money out of the company in profits, the company pays the tax on that profit, and then when it shows up on your personal taxes, you will pay a tax on that again. So there is double taxation. Now this structure is better if your personal tax bracket is above 21%, because with the new tax laws that came into effect, the federal corporate tax percent, before it was, I believe, around 25%, so a drastic reduction. And so right now, if you personally are over that tax bracket in your personal income, where you have a job or anything like that, then you might be better off doing a C Corp in that sense. So that's one of the things. So moving forward, the qualified business income deduction. Now, this is one of the things that's just introduced under the new tax laws. So this was basically for 2018. What this does is that income that you have from any pass-through entities. So pass-through entities meaning sole proprietors, LLCs, and S corps, companies whose profit and losses actually show up on your personal taxes, right? So those are called pass-through entities. So any income from those entities is automatically subtracted by 20%. So only 80%, I'm saying only, but 80% of the income is actually considered for taxes. So I mean, it's still a big tax saving compared to the previous tax laws, right? Before, any profits that you showed on these companies, they would show up on your personal taxes, and 100% of that profit will be added to your taxable income. But now it's 80%, you're automatically subtracted 20%. So this is another reason why S corps and LLCs and sole proprietors are more popular now, is because this is another tax saving you are getting under the new tax laws. So unless you have a really, really high tax bracket, one of the pass-through entities is what you will probably choose to go with, right? Okay, so coming on to common deductions or common expenses. Now, people on the call who have been in business for a few years or have run their own businesses, they probably are familiar with them. Anybody who's maybe just starting out, I think it's a good tool that you can use when it comes tax time. So marketing and advertising, as we're talking about, you're printing business cards, flyers, maybe signed up for LinkedIn Premium, maybe you open a website, all of those things you can deduct under here. Meals and travel, I think pretty self-explanatory. You're traveling to meet clients, taking them out to lunch, dinner, stuff like that. That goes in there. Health insurance, some people take health insurance through their company. Sometimes the premiums are a little bit better, so of course that is deductible. Professional services, so services that you might pay someone else, such as an accountant or a lawyer, stuff like that. So, or as some, maybe you're getting into an industry that you might have to consult someone on, and you pay them for their time. So those can go under professional services. Supplies, I think pretty self-explanatory. If you have a home office and you need supplies for that, anything like that. So auto mileage. So I think that's one of the bigger questions that I probably get from clients is, can they deduct their vehicle expenses or mileage expenses and stuff like that? And I'll get into that a little bit more in detail next. Then you have membership dues, licenses, industry subscriptions. As I said, if you are doing a joint venture and you're focusing on a particular industry, maybe you subscribe to their magazines, articles, stuff like that. So you can deduct those. Continuing education, you buy Sohail's book, you attend his boot camp, those can go in there. Gifts or referrals. Then you have home office space. So now you're starting this JV business. You're not actually going out and renting an office. Let's say you convert a current room in your home into a home office, or part of your basement into your home office. So you can actually claim those expenses on the taxes. You can actually claim part of your utilities, part of your internet, those kinds of things. Typically how you do that is, let's say, just for example, you have 1,000 square feet house and you have 100 square feet of that is your home office, right? So that's 10% total. So you can take all your utilities and internet and those and just multiply by 10%, and that's your home office expense, right? So that's how you can do that. Then of course cell phone, you can do a portion of your cell phone. It has to be the business use percentage. And of course conferences you attend can also be tax deductible. Okay, so vehicle expenses. Now when we talk about vehicle expenses, according to IRS ruling, there are two types. You got standard mileage and actual expenses. So standard mileage expense is 54 cents per mile. So what that means is, let's say you drove to meeting clients, attending lunches, dinners, any business activity that you did that you had to drive for, and let's say you drove 10,000 miles during the year, you can just straight multiply that by 54.5 cents, and that's your expense that you can just claim on your tax return. The other way you can do is you can actually do actual expenses. So the actual depreciation on the car, the actual licenses, actual gas, the tolls you paid, part of lease payments, insurance, garage rent, parking fees, all of that stuff. So you can total up all those actual expenses, and if those add up to more than how much your standard expense is coming out, then you go there. But if your standard expense is coming out more, then you just do that. So this is how typically, so in a particular year, you can only do one. You cannot kind of switch around. So you just need to, typically I found, especially if you drive a lot, the standard mileage expense is more, unless in a particular year you had significant repairs or stuff like that. Now, when you come into having a corporation and then you buy a car and then you need to depreciate it, you can do that. You can also deduct lease payments. Now, if you actually get into it, there are some requirements. So if you're talking about depreciation, there are requirements about, how heavy the car is, if it's a passenger vehicle and stuff like that. If it's a lease payment, then there are some restrictions as to what kind of car it is and how much of a business use it has and stuff like that. I don't want to get into all that in this because we want to be brief, but if you guys have any specific questions about that, you can, DM me and I can clear up any other questions you might have on those things. Okay, startup loss. So I think one of the things that a lot of people actually don't know about, then when you start a new business, the IRS actually allows you to claim up to a $3,000 loss without needing any revenue. I actually have a lot of people who come in and they don't know about this. They start a new business. So let's say you're starting this new joint venture business, And so you attended Souls Boot Camp, you got the books, you started advertising and all of that stuff. Of course, it takes time. You have to build relationships and all of that stuff. So now maybe it's at the end of the year, you still don't have any revenue coming in yet. And you think, oh, but I spent all this money so far, and that's all gone, because you can only claim expenses in the year you spent. You cannot carry them forward into a future year. So you might think, oh, but I cannot claim these expenses anymore because I didn't have any revenue, but that's not true. You actually can, up to a maximum of $3,000. You can actually do that. So I think one of the major points that a lot of people don't know about. Okay. Now, I just wanted to clarify this here. What entity structure you choose depends on your specific situation. Okay, so not everybody is the same. Maybe you have jobs, your spouse has jobs, you filed your taxes together, your tax brackets change because of that. So all of those factors come into place when we decide what entity structure you need to have. So I have clients come in, so we actually have to sit down with them in person or over email or whatever, to see what the total income looks like, when they're starting this new business, what income over there would look like, and depending on all of that, and what type of deductions they have. So depending on all of that, then we decide, okay, what entity will you need to go with, right? So just make sure that what legal structure you need to have depends on your situation. Okay, so I just wanted to put in a couple of case studies here to give you guys maybe an example of, having a good legal structure and how having a good tax plan can actually help you. So recently I had a client who owned a couple of different businesses, and he also had a very large real estate portfolio. He had about a lot of rentals, and they were in different states. So last year on his personal tax return, when he filed them, he had to pay out of pocket $8,000, right? So this year was the first year that he worked with me. His income from his other businesses and his other jobs and everything was about the same, but the net result that happened for him this year was he actually got a refund from the government for $5,000. Now, so you can see there's a big difference. Now, and the difference happened because we showed him as a real estate professional, even though he is not a realtor by profession. He does not have a realtor's license, but if you actually look at the tax code, he does qualify as a realtor, because the tax code does have that if you have over 700 hours in a real estate activity, you can be considered as a realtor, or at least you are able to deduct all of your rental losses. What happens typically is you have rental property and you have other income coming in, and your income is too high, so any rental loss you have, you're not able to claim it. But of course, it's different if you're a realtor, and even if you're not a realtor, if you have enough hours in a real estate activity, you can qualify, and that of course gives you a major difference on your taxes. So he never knew about this. His previous tax professional never advised him on that. We, of course, whenever somebody comes to us, we look at his particular industry and we do a very in-depth research for his industry to make sure that we're taking advantage of all of the tax breaks that he can. We also found that he qualified for some other tax loopholes, but we couldn't take advantage of it because it was already too late. It was pretty much near the end of the year. So, but we'll be implementing those going forwards for this year and the future. So you can see that with just one tax strategy, we managed to save him around $13,000 just for this year, and that will be a recurring saving every year going forward, right? Number two, pretty simple. A client came to us after he had been audited by the IRS. He wasn't a client before us. We didn't do his taxes when he was audited. He handled the audit actually by himself because whoever prepared his taxes just disappeared, I guess. And he received a bill for $11,000. So he was recommended to us by someone. He came with all his box full of documents. We looked over everything. We looked over everything that the auditor had done. And then scheduled an in-person audit with the senior IRS auditor, and we actually found mistakes that was done by the field auditor, and we point those out. And the IRS never likes to accept that they did mistakes, but they're pretty glaring, so they had to accept it, and they waived all charges against our client and closed the case in his favor. So the lesson here is the why I wanted to just put this in here is that the IRS is not always right? They send bills, they send stuff out, and especially this year, I've actually seen a couple of people getting letters for apparently no reason, just the IRS saying that we don't think that you qualify for it, but if you do, just tell us and we'll send you the refund. So you can see that they're playing on people's fear of the IRS, because a lot of times people get letters from the IRS and they just accept it, right? They just say, oh, it's the IRS saying it, so I probably owe them money, or if I was going to get $5,000 back, but now I'm only getting 500, they are probably right. So, and I'm not going to talk to them, I'm not going to respond to them. I have people who never even open their IRS letters because they're just so afraid of them. So this is some things that you guys need to just make sure, and if you work with a really good tax and accounting professional, they can help you through that. So this is the last case study. We do annual tax planning with all of our clients, especially after tax season is over. We sit down with all clients or invite them to sit down with us to go over their financial situation. So for one of our clients, we saw who was a long-time client, we saw that according to what he was estimating, he would be profiting in the next year on his business. The current structure he had would not be beneficial because he also had a full-time job, a pretty high-paying job, and he was going to get expecting bonuses, or there was going to go over the 30% tax bracket. So as we mentioned earlier, if your tax bracket is anything over 21%, it's probably better for you to change an S corp into a C corp, and that's what we did. And the profits on the corporation were taxed at a substantially lower rate, which saved him thousands of dollars for that year. So the point of this was that you always have to be proactive in tax planning, because there's very little you can do when it's tax time and the year is already gone. So I've had people come in during tax season, and now they have this much profit, and I can clearly see, and I tell them that if you just had come to me a few months, 6 months, 7 months before tax season, we could have changed your legal structure, so you would have saved thousands of dollars. But now it's already done. It's already gone. That year is already gone. The tax year is closed. We cannot go back and start changing stuff. It's already too late. Sometimes we have something that we can do, but it's very hard, especially because then you have to convince the IRS of why we are changing it so late, and there are many steps to it. So you always just be proactive. Always contact your tax person in the early part of the year, and make sure you sit down, let them know where your income is going to be for the year, and just do some tax planning. Okay, so so we have over 600 clients that we deal with every year, and these case studies are very few from the many we deal with every year. As I said, a lot of them lose out on tax breaks because they just late, they didn't know what the tax code allowed them to do. And of course, I understand it's not, if you're not an accountant or if you're not a CPA, it's not your job to know the tax code. Even for us, the tax code is thousands and thousands, 7,000 pages long, I think, right now. And it's impossible for even us to know every single detail, but the benefit for us is we have the resources to actually go in and do the research and get you all the tax breaks that you're supposed to get. So that's why it's always have a sit down with the tax professional, with the client, and just do that before the year ends. You can always, of course, DM me on Facebook. You can email me on faizan@fairmanscript.com if you have any questions, or if you want to talk about anything that is for you specifically. So, and yeah, feel free to reach out anytime. Now, if you guys have any questions, feel free to let me know and I can answer them.
Yeah,
Thanks for help.
Yeah, thanks for that, Faizan. Yeah, if you have any questions for Faizan regarding any sort of the correct way to set up basically as a consultant. A lot of people when they're first going into this ask me the question in terms of what sort of setup should I have. Now, if you're going to be targeting sort of corporations and corporate companies, and if you're going to be pegging yourself and saying, look, I'm going to be only working with companies that are minimum sort of, $5 million turnover, for example, then, incorporating yourself as a company, I think is very important because it, yeah, it's very important because I think if you're dealing with larger companies, especially when it comes to transactions, and some of these companies also, they have special supplier lists. So to get you onto a list as a supplier, I think it's quite important that you incorporate as a company. That's what are your thoughts on that?
Yes, exactly, and that's one of you hit the nail on the head over there, because that if you are dealing with such large corporations, and one thing that you said, that if they are going to put you on as a supplier, they do ask for like tax ID numbers and stuff like that. So and you can only get that if you're a corporation. So true, if you are going to be targeting that level where you are with such high dollar amounts and you're going to be transacting such high dollar amounts, it's always better to just to do an incorporation.
Especially when we talk about the consulting side, the brokering side probably not so much, but the consulting, if you're going into corporations, then yes, it's very important. You can't just, you need to be incorporated as a company and have that because, it comes down to invoicing, tax IDs and a structure that they're used to. So I think that's probably the best way to do it. So if anyone's got any more questions for Faizan, and if not, then you're welcome to reach out to him. He's in the group, so you can either message him in the group or you can ask any questions in the group if you want. The great thing is not only a CPA but he's a lawyer as well. So one of the things I always talk about is doing business in the US is different than doing business in other countries because each individual state has a different law. So any agreements and contracts that you have, I always say I'm not a lawyer. As a disclaimer, that you need to get it looked over. So it's good to have someone like Faizan in the group. If you are dealing with a large organization, it's a good idea to reach out to him because I know a couple of people that he's doing things for, and I myself. I'm going to be focusing more on the Middle Eastern and Asian market, not so much in the US market moving forward, or else I would definitely have taken up him on many of his services. Let's see if we've got any questions. Okay, so that's fine. Everyone says thank you very much for the valuable information. And like I said, this guy is recorded, so if any of you guys want to go back and have a look, you're welcome to do that. And I will put it as a special headline in the actual post, so if people want to find it in future, they can type it in. Okay, Faizan, thank you very much for your time. I really appreciate it, and we'll just wrap up now with the normal Q&A. So I'll just mute you, and then I'll bring it back. Thank you. Okay, all right, let's. If not, then I will wrap up this call. Yeah, I'll wrap up this call. If we don't have any more questions, then I'll get the recording the group. Any more questions, guys? If not, then let me know. Or else I will. Okay, Connor, brilliant. Yes, fire away. Question. Well, says thank you, Faizan, for your presentation also. Eric says, we totally missed this question. Eric says, do you have any recommendations for legal reviews for financial copywriting or client attraction for financial advisors? You know what I'll do, Eric? If you can put that question into the group, and can you tag Faizan in that question, and then I'll just get Faizan to answer it in the group. That might be probably easier if you do that. Let's see, Connor. Okay, brilliant. Thanks, guy. Thanks, Eric. Connor, have you got your question before we wrap up? Yes, I saw that, but I think Connor, if you can do a JV with Sephora. I do know who Sephora is. I've seen them quite a lot in America, in the US. That would be something you can do, but for that you need to be very, very experienced to do something like that. That is a very, very big corporation. Here's what I'll do for you, right? As a favor for you, to help you. You sign up your client, okay? Sign up your client who's got this skincare company, and let's try a JV first with the jewelry brand company. What I want to do is I want to try and get a JV off the ground, and then like I said, we're welcome to reach out to Sephora if you want. It's not a problem at all. But I think you have to get started somewhere with this client. So if you can get the ball rolling, keep me up to date, and then we could definitely see what we can do with Sephora. What you would need to do in the meanwhile, though, for me, is if you can find the right decision maker at Sephora. If you go to LinkedIn or search on the internet, send me the decision makers at Sephora, which would be like a marketing director, head of business development, head of strategic partnerships. So you're going through the program right now. So go through the modules to see how we do that. And then, Sephora is something we can definitely do. I don't see a reason why we can't. And also send me a link to Huxley as well, if you can. Send me a link to their website and to their products, and I'll have a look for you as well. And we'll see what we can do on that front. Always do some research. If you want to target Sephora, have a look and see what Sephora is already doing as well. Do a bit of research on the internet and find out what partnerships they already have in place. Do they have any partnerships currently with a skincare line company? So have a look and see first what they're doing, what kind of partnerships that they're doing, because research is important. So when we do eventually approach them, we know the pitch will be successful because they're already doing something similar. Yeah. Okay, cool. So if that helps, just keep me up to date on that and let me know how you get on. All right, guys. So I'm going to wrap up the call now, and I'll have the recording up into the group. Thank you very much to Faizan for his time and a very detailed presentation. That I was quite impressed, to be honest with you. It covered pretty much everything that we need to know. And like I said, guys, if you've got any more questions, please add them into the group, and then we can continue the conversation then. I'm off to the US. I'll be in Vegas next week. So next Mastermind is the week after, which I think I'll probably be somewhere in the Middle East or Asia. But like I say, please do make sure that you guys do attend that one and have some questions ready for me and the group as well. All right, guys, wherever you're in the world, have a great evening, afternoon, morning, and I will speak to you guys soon. So take care. Bye-bye.